This program was first broadcast on Canterbury's access media station, Plains FM, and was made with the assistance of New Zealand On Air.
Welcome to your weekly dose of the Accountology Show. I'm your host and chartered accountant, Nicole Haig, with an insatiable curiosity for uncovering accounting ideas to help businesses grow. I have so many nuggets of gold to share. Are you ready to make your good business great? Let's get stuck right in. Hey, it's your host, Nicole Haig, and welcome to another episode of the Accountology Show. In accounting news, in mid-March 2024, the government announced changes to the tax bill. These changes would legislate most of the key promises made by the government during the election campaign in relation to, amongst other things, interest deductibility on residential rentals, the end of depreciation on buildings, while also fixing rules around the disposal of trading stock. So let's look at each of these. Interest deductibility on residential rentals. This was restricted with effect from the 2021 income year in stages. For the year ended 31st of March 2024, no interest deduction is permitted for lending to acquire residential property post-2021, with a limit of 50% deductibility on pre-2021 lending, with some limited exemptions. Full interest deductibility will now be restored, but in two stages. For the year ended 31st of March 2025, a deduction of 80% of interest paid in relation to residential rentals will be available. This will apply to both pre- and post-27th March 2021 lending. Any property that would have had 100% deductibility under the previous rules, for example new builds, will continue to have this for the year ended 31st of March 2025 under the new rules. For the year ended 31st of March 2026, a full interest deduction will be available. Anyone who had their interest deduction deferred under the previous interest limitation rules, for example, where a property would be subject to the Bright Line test and an interest deduction would be available on sale, will still be able to take advantage of these rules. The end of depreciation on buildings. From the 1st of April 2024, a depreciation deduction will no longer be available in relation to commercial and industrial buildings, and therefore the status quo, which existed from 2011 through to 2020, will be restored. Disposals on trading stock at below market value. It's been exceptionally frustrating that businesses who donate trading stock to do good for the community, for example, donating food to a food bank, would face a tax consequence for doing the right thing. The Income Tax Act contained a rule that meant any disposal of trading stock at below market value would result in the business deriving income equal to the market value of the trading stock. This rule was particularly disliked by businesses who wanted to donate trading stock to worthy causes, such as charities. Planned amendments would mean this rule would only be applicable for associated persons, disposals, trading stock taken for private use, and trading stock not disposed of in the course of carrying on a business, with the exception of trading stock donated to a charity. If you have any questions about how these changes could impact your business, please ensure you contact your accountant. In today's episode, we will kick things off with a topic that's as essential to business success as your morning cup of coffee: cash flow. Now, I know what you're thinking, cash flow sounds boring, right? But hold on to your hats because we're about to flip that notion on its head. You see, cash flow isn't just about numbers and spreadsheets. It's about the lifeblood of your business. It's about those moments when you're anxiously awaiting for payments to come in or when unexpected expenses rear their ugly heads. In this fast-paced world of business, cash flow can make or break your business, and trust me, it doesn't discriminate. So buckle up, because in this episode, we're going to demystify cash flow, tackle the misconceptions head-on, and equip you with the tools and know-how to navigate the choppy waters of business finance like a seasoned captain. Ready to dive in? Let's do this. Are you a business owner struggling with profit, cash flow, or to find balance between work and life? At Nicole Haig & Associates, We want to help business owners just like you reclaim your freedom. Freedom to spend quality time with loved ones, freedom from stress, and freedom from financial burdens. But how do we do it? It's simple. We listen, we understand, and we create bespoke, structured programs tailored to your unique business and personal goals. With the right education, coaching, and expert advice, we'll show you how to increase profits, improve cash flow, and align your business and personal goals. Don't do it alone. Let NH+A be your guide to success. Work smarter, not harder, with our proven accountability methods. Your freedom starts here. Contact us today. So let's take a breather from the hustle and bustle of running our businesses and dive into a topic that's super crucial but often overlooked. Cash flow. You know what they say, cash is king. But it's no secret that New Zealand has a high rate of business failure. And as I mentioned in a previous episode, it is super easy to start up business in New Zealand with very little barriers to entry. But it doesn't need to be this way in terms of the high number of business failures. From our experience, one of the main contributors to this failure is business owners not understanding their cash flow. Unfortunately, a lot of business owners have not been taught how to do this or simply don't make the time to learn it. Invest in yourself and understand where your money is coming and going to. So does this sound familiar? You're meeting with your accountant and they're going over your annual accounts and your income tax position for the last financial year, and then they proceed to say, oh, you've made X amount of profit and you have X amount of tax to pay. And your response is, I made that much profit, but I don't have that in my bank account. How can that be, and where did all the money go? And that is a great question. The first step is to understand that cash flow and profit are different. So profit is your sales, less your direct costs, less your overheads, then less depreciation, shareholder's salary, and income tax. But depreciation, for instance, is not cash. It's just a book entry. So this will not go through your bank account. Cash flow, on the other hand, is everything that goes through your bank account. It includes most of the profit and loss, excluding depreciation, which we just mentioned, as well as items that are not taxed, such as GST, fixed assets purchased for the business. For example, you've bought a car or a ute or some plant or machinery, and principal repayments on loans, or drawings, which is money taken out for personal use. But I want to add in here that there are business owners out there who will willingly divulge to one and all that will listen that they have turnover or sales in their business of X amount, where X amount is a large number. You know the type. You're at the pub and this loud business owner prattles, oh yes, I've just turned over 18 million in sales last year. Okay, and whilst that sounds impressive and successful, we refer to these as vanity metrics because that's great, you've got a turnover of 18 million, but what really interests me is what are your margins like and what are your overheads like? So really, what is left over once you've paid all of that out? The saying goes, sales are vanity, profit is sanity, but cash is king. The real purpose of business is not to make a sale, it's to make a profitable sale and then to get the money in the bank. $18 million worth of sales is hopeless if you haven't chased the people that owe you the money and it's not sitting in your bank account. That's cash flow. Cash flow doesn't have to be a scary monster lurking in the shadows of our financial statements though. But fear not, because I've got some nuggets of wisdom to share that'll make handling cash flow a breeze. Now picture this. You're knee deep in your business, doing what you love, making those sales and seeing those numbers climb. But behind the scenes, if you're not keeping a close eye on your cash flow, things can get very messy very quickly. You might find yourself stressing out, feeling anxious and losing sleep over those pesky cash flow woes. Does this sound familiar? Well, you're not alone. According to recent data from Xero, a whopping 80% of small business owners are feeling the heat because of cash flow issues. That's right, 80%. And if that's not enough to make you sit up and take notice, how about this? 70% of business owners are reporting increased anxiety and a staggering 60% are struggling to sleep at night. Yikes. There's a whole lot of stress for something that should be as simple as money in and money out. But here's the thing, you don't need a fancy degree in accounting to tackle cash flow. You just need a little bit of know-how and a willingness to learn. So let's break it down, shall we? So how can you improve your cash flow straight away? Here's 5 steps to better cash flow. The key is getting your invoicing right by invoicing customers as soon as possible and using tools like Xero's invoice reminders to move payments along. That said, there are a few other simple rules you can apply to manage your cash flow and get your invoices paid faster. Number 1, keep your books accurate and up to date so you can see your financial state at a glance. Number 2, don't be too lenient with your customers. You can be direct and still polite. Keep a close watch on your accounts receivable, the money owed to you, turnover at all times, and act sooner rather than later. 3, keep your accounting simple. So you've got a good handle on these basic business metrics, and your accountant can help you with that. Number 4, keep your business and your professional finances separate. This is essential to understanding your true cash flow position. Mixing your business and personal finances can leave you uncertain about your business performance. And number 5 is build a cash reserve, so you are prepared for unexpected events and can take advantage of opportunities when they pop up. First, you want to get your invoicing right, so get into the habit of sending invoices out quickly, then follow the steps, just like I said, to collect revenue and keep your finances organised. And get in touch with your accountant for guidance on your invoicing and better business cash flow. Now, as I said, cash flow is basically the movement of money in and out of your business. It's something fluid. It's like the heartbeat of your operation, keeping things ticking along smoothly. But here's where things can get tricky. Sometimes it's not just about how much money's coming in, but also when it's coming in. And don't even get me started on those pesky expenses that seem to pop out of nowhere. There are plenty of ways to tackle cash flow head on and come out on top, just like the 5 tips I just gave you. But why is cash flow so central to good financial management? I'm going to explain it in plain English. So what is cash flow? As I keep repeating, cash flow refers to the movement of money in and out of your business over a specific period. In the most basic terms, cash flow is the process let me repeat that. Okay, so in the most basic terms, we've got cash inflow and cash outflow. So the ideal scenario is to be in that positive cash flow position. This means that your inflows outweigh your outflows. So that is, more cash is coming into the business than is going out. When you're cash flow positive, the main benefit is that you have the liquid cash available to fund your daily operations and your debt repayments. On the flip side, if you're in negative cash flow position, this can be a red flag that the business is facing some financial challenges and that some serious cost cutting and or revenue generation is needed. So how does cash flow fit your business? Not having enough liquid cash is one of the main reasons businesses fail. So it's absolutely vital that you keep on top of your company's cash flow. So here's 5 key cash flow areas to focus on. 1 is monitoring your cash inflows and outflows. This means regularly tracking your cash inflows from sales, loans, investments, as well as managing your cash outflows from expenses, purchases, and debt repayments. Number 2, managing your accounts receivable and payables. So this is money that's owed to you and money that you owe. Efficiently managing your customer receipts and supplier payments helps smooth out your inflows and your outflows and delivers stable cash flow that's easier to predict and manage. Number 3 is getting proactive with your budgeting and forecasting. Creating realistic cash flow budgets and forecasts helps you predict your future cash position. By anticipating your future cash needs, you can actively plan for potential shortfalls or surpluses. And we'll talk more about this shortly. Number 4 is being in control of your stock inventory. Having excess stock in your warehouse ties up cash. So it's a good idea to optimize your inventory levels and to only manufacture or order the items that you need on a day-to-day basis. And number 5, like I said before, is investing in your cash reserves. So with emergency cash reserves in the bank, you know you have the funds to handle unforeseen cash flow issues or sustain your operations during lean periods. This makes your whole cash flow position more stable. So you need to question if this should be the equivalent of 3 or 6 or 12 months worth of overheads. Cash flow forecasting. So we all know that positive cash flow is the beating heart of any successful business. And with so many external pressures on cash flow right now, it's important to have one eye on the future. Cash flow forecasting is an increasingly important tool for any finance team. With a better view of your future cash flow position, you can make well-informed decisions about your finances. But how does cash flow forecasting work, and how does it help to maintain a positive cash flow position throughout the year? So let's look at what a cash flow forecast tells you. The cash flow process is all about balancing your income, so the cash inflows, against your expenditure, the cash outflows. Now remember, if your cash inflows are greater than your outflows, this is called a positive cash flow position. In other words, you have cash left over even once you've covered all your costs and paid all your bills and paid the wages, cash that can be then reinvested in the business. There's forecasting apps like Float, Fathom, Futurely, which use historic cash data to project your cash position forward in time. Even Xero now has some of these functions. This helps you see where your cash may be in future periods. Running detailed cash flow forecasts means you can understand your future operational cash flow, helping you spot any cash flow holes, seasonal dips, or predicted months of high expenditure before they become an issue. Also, you can plan your costs and expenditure effectively, allowing you to stick to your planned budgets, manage your costs, and plan for any steep price increases, and avoid the cash flow issues before they happen. Plan and get tighter control over your cash flow management. Staying in a positive cash flow position is a challenge in the current economic situation. When supplier prices and operational costs are fluctuating and revenues are hard to predict, it's difficult to juggle your inflows against your outflows. But it can be as simple as just even creating a spreadsheet, detailing money expected to come in versus what you're expecting to go out, adding this to the opening bank balance to see where your closing bank balance would be sitting. Otherwise, your accountant will help you get a tighter grip on your cash flow. Setting up detailed forecasts helps you understand your financial story and puts you back in full control of your cash flow. One of the best pieces of advice I can give you is to seek help when you need it. Don't be afraid to reach out to experts who can lend a helping hand and guide you through the maze of cash flow management. Whether it's hiring an accountant, investing in some great software, or joining a community of like-minded business owners, there's no shame in asking for a little bit of assistance. But I recommend at the very least you invest in educating yourself. And hey, if you're the DIY type, there are plenty of resources out there to help you sharpen your cash flow skills, from online courses to informative blogs and shows, of course, like this one. The world is your oyster when it comes to learning the ins and outs of cash flow management. So what are you waiting for? Let's banish those cash flow blues once and for all and start sleeping soundly knowing that our finances are in tip-top shape. Remember, we're all in this together, and with a little bit of know-how and a whole lot of determination, we can conquer cash flow like the bosses we are. So in conclusion, cash flow might seem like a daunting topic, but it's one that every business owner needs to understand to thrive in this competitive world. We've seen how cash flow woes can lead to stress, anxiety, and sleepless nights, but fear not, because armed with the right knowledge, tools, and resources, you can conquer cash flow like a pro. Remember, cash flow is simply about managing the flow of money in and the flow of money out of your business. It's like staying on top of your finances, anticipating cash needs, and making informed decisions to keep your business afloat. Positive cash flow is the beating heart of your business. Working with a good advisor helps you to keep that cash flow healthy, stable, and driving your key goals as a company. Keep accurate records, track your inflows and outflows, and deliver the best possible cash flow position for the business. Here's to financial success. Okay, so 3 action points from today's episode. Number 1 is educate yourself. Take the time to learn the basics of cash flow management, whether it's through online courses, books, or informative articles. Gaining a solid understanding of cash flow principles will empower you to make informed decisions for your business. Number 2 is track and monitor. Implement a system to track and monitor your cash flow regularly. This could involve using accounting software, creating cash flow forecasts, or even just keeping a close eye on your bank account. By staying vigilant and proactive, you'll be better equipped to anticipate cash flow challenges and address them before they become major issues. And the third is implement the 5 steps to better cash flow. The key is getting your invoicing right by invoicing customers as soon as possible. But also keep your books accurate and up to date. Don't be too lenient with your customers. Keep your accounting simple so you've got a good handle on these business metrics. Keep your business and your professional finances separate and build a cash reserve so you are prepared for a rainy day. And if there's one aha moment from this episode, the importance of prioritising and mastering cash flow management in your business. Cash flow is the lifeblood of your operation, and understanding how to effectively manage it is crucial for long-term success. By educating yourself, tracking and monitoring your cash flow, and implementing 5 steps to better cash flow, along with seeking support, you'll be better equipped to navigate the ups and downs of business and build a financially resilient business. So remember, don't underestimate the power of cash flow. It can truly make or break your business journey. Thanks for joining us on the Accountology Show. If you have enjoyed today's show, you're in luck because we'll be back next week. You'll find past episodes at plainsfm.org.nz and subscribe on Apple Podcasts or Spotify to never miss an episode. We would love it if you would leave a 5-star review and tell a friend or business owner who would benefit from hearing our show. We also love hearing from you, so reach out with any comments or a topic you'd like covered, and even suggestions for whom we should get in the studio next for an interview. You can find us on Facebook, Instagram, LinkedIn, and TikTok. Our handle is NH Plus Associates, that's NHPLUS Associates, or email me, nicole@nh-a.co.nz. But most importantly, thank you for taking the time to listen to the show. Until next time, keep building that business into the empire it absolutely deserves to be.